the Tax Rep podcast is now proudly partnered with Nice Job, the experts in reputation marketing. Reviews are so important for attracting new clients. Before Nice Job, I would ask people to leave reviews, but they would usually forget, and I didn't have a way to stay on top and remember to follow up with them. That's where Nice Job comes in. Their smart follow-up campaign recognizes who hasn't left a review yet and automatically sends carefully timed reminders that can increase your chances of getting a review by 300%. I tried Nice Job for Tax Rep, and it's been a game changer. We added 33 five-star reviews in our first month, and our Google business profile is like a magnet for new customers. You can try Nice Job for free for 14 days and get 50% off your first 3 months by visiting nicejob.grsm.io/taxrep. nicejob.grsm.io/taxrep. I'm going to put a link in the description of the podcast. Try it. It will be a game changer for your business as well. How do I manage my tax rep practice? How do I get transcripts? How do I track what is going on with the IRS with every single one of my client cases? How do we complete the offer forms, the powers of attorney, everything? We use Tax Help software. Tax Help software is the cornerstone of our practice. We use it for its intelligent ordering. Every single night, it will update the transcripts on our clients, so we will see things happen long before those letters even go to the mail. We can then, react. We can let the client know. We can get all the transcripts we need to determine what our client's best options are, when is the debt going to expire, and we can fill in all of the IRS forms and get them filed accurately, the analysis done correctly. If you're interested in giving it a test, go to taxhelpsoftware.com, use promo code TAXREPTRIAL, all one word, all caps. You'll get a free 2-week trial. Again, that's taxhelpsoftware.com, TAXREPTRIAL, all caps, for a free 2-week trial. If you love it and want to buy it, use TAXREP10, capital, all caps, TAXREP10, TAXREP10, all caps, one word. You'll save 10% on your purchase. It will be the engine that runs your tax rep practice, just like it's what we use for ours. So thank you, everyone, for joining me this week with the Tax Rep Network podcast. I am joined again by Michelle Weinstein from The Abundant Accountant. Michelle, thank you for doing this.
Oh, thank you so much for having me. I love podcasting with you, Eric. So it's always a pleasurable experience, and I love how we can make an impact on different firms and making change.
No, I agree. And so I have my book on how to build $1 million tax rep practice is coming out shortly. And there's a whole chapter in there I have, Michelle, on what to do with your 1040 practice, because I get this a lot.
I do too.
Right. I mean, so, they start advisory services, rep practice, financial planning, whatever they're doing in high end. At some point, most of them, at least my tax rep members, will hit that fork in the road, right? Where I'm being stretched too much. I can't keep doing both. What do I do with the 1040 practice? And so what I thought, I'm curious what you think about my approach.
Sure.
I'm going to throw out there what I tell people to do, and then we'll hear from the pitch queen what she thinks about Eric Green's approach to this problem. So,
sounds great. And then, for everyone who's listening, they'll be able to understand the Eric Green versus the pitch queen approach, and then they get to decide how they want to proceed. So they can, have $1 million practice without the headache of the 1040.
So when I get asked, what do I do with the 1040 practice? My response is always, well, what do you want to do with it? And they'll say, well, should I get rid of it? Do you want to? I mean, that's really the issue here. So but what I think is really being asked is, I can't really do both. I'm overwhelmed. What do I do? And so when I say, well, how many 1040s are you doing? And I'll hear 300, 500, in one case, 2,000. Okay, so you've got all these returns.
Yeah.
Do you want to stop doing 1040s? Because if you want to get out of the business, then it's easy, right? We're going to try to package it to sell. We can get into that a little bit later, but you're getting rid of it.
Yeah.
But if you don't really want to get rid of it, but you want to bring some normalcy to your life, you want to maximize your effort, all of that. Here's what I tell clients. I said, look, and this is perfect time, right? We just finished the extensions. We have a breather until next tax season. Here's what I would do. Print out a listing of all your clients. Print out your receivable list. Go home, get your favorite beverage. Here's what I want you to do. Go through the list. All right. First of all, your receivables. You shouldn't have receivables. Nothing meaningful.
And
right?
I
So
agree with that 100%.
If you have receivables, there's something else wrong with your practice, and I know what that is, but that's another podcast. But the point being is, anyone that owes you money, before we implement what I'm going to suggest, go collect whatever you can collect. All right, go collect your receivables as quickly as you can, because what you're going to do is you're going to go through your clients and you're going to rank them from A to F. The A clients are the clients you love. They pay on time. They listen to you. They are enjoyable to work with. Your B clients are good clients. They don't really want to pay for enough of your time, or you don't really put as much focus on them, but they don't bother you too much. They're mostly paying what they should, not bad clients. C clients, to me, are clients that really could be B's or A's. Either you don't have time to spend with them, or they're not really willing to pay for the time to get there. The D's are clients that they're just pains in the neck, or they're slow payers, or they don't pay at all. And the F's are the ones that just suck your will to live, and everyone knows who they are, right? You have 10 clients that day. They're the one that just ruin your day consistently.
Yeah,
So you rank your clients from A to F. After you've collected your receivables as much as you can, the D's and the F's get fired immediately. Done. Goodbye. Don't let the door hit you in the ass. Wish you the best of luck. Go ruin someone else's day. Right. So the toxic ones have to go. And when we fire them, it doesn't have to be mean or nasty. What I would suggest, and what I suggest to my members, is they send a letter that says, we are simply unable to manage the volume of cases. We have determined we really cannot handle your account properly. And at this point, for this coming tax season, you really do need to go find a new preparer. You should have all of your original documents. Most accounts now have some sort of a portal. Your stuff is up there. You can go download. We wish you the best of luck. Goodbye.
Yeah. And also another thing, if you want some input on the letter that you can include in it, is just share with them what you've been doing in your firm and how you're making different changes, and it's just no longer a fit, and you just can't service them because you've been focusing on tax resolution and other more advisory services, consulting engagements, and unfortunately you won't be able to service them in the capacity like you did before. So I think it is really important to include in that letter what you've been up to. I just sent an email out to the email list today about what I've been up to. Maybe something about what you and your family have been going through over the last 6 to 12 months. Like, get a little bit personal in your letter, and it will also, land a little nicer. But yeah, your clients, they don't need to have it in a harsh way just because we're using the word fire those clients. It's just no longer a fit for the way you're growing your practice and the way you want to take your business.
By the way, that's one of the problems when accountants use this, I'll be cheap, and just get people in the door. You are setting up expectations that you're going to be like the low cost Walmart version of accounting. And listen, if you can automate and do that, I mean, there is a niche there. But most accountants I know don't have that level of automation where they can leverage the low rates and make money. What happens is they just do a lot of work for very little money.
Right. And then they feel undervalued, underappreciated, and seen as a commodity. And they wonder why they keep trading their time for dollars left and right. And it's a vicious cycle to get yourself in on.
Right. And we're going to get into this when you go to sell the practice, but people are always like, well, I'll raise rates over time. What you'll find is those cheap clients will quit and they'll leave and go somewhere else. So I've
You
never
might
been
as well get rid of them right away.
I've never been a proponent of that. Now,
And neither have I. And that's, Eric, why we get along so well.
and no, and with those A, B, and C clients, what I would suggest is your C clients are going up $100 a return across the board, and your A and B clients will go up $50 a return across the board. Why? Well, quite frankly, I don't know about the world you live in. The world we live in, the cost of everything goes up. My rent goes up. My staff want raises. The supplies go up. I don't know if you've heard of this. There's something called inflation going on. The coffee goes up. The computers go up. Everything goes up, right? So you increase. Now, again, a bunch of those C clients are going to get upset and they might quit. Good. Bye. If all works out, and it will, you will find that you're going to make as much, if not more money, doing less work and working with people that you want to work with. And now it's very freeing. So now when new clients come in, you will be charging appropriately. You don't need them, right? So if they want to come in and pay the going rate, then great. If they want to come in and they're now nickel and diming, negotiating with you, goodbye. There was a time when I started my practice where I would be running around at night and whatever. And all right, an estate plan back then, $1,500. And if they like, I can't really afford it, maybe we could do $1,000. I would agree because I just needed the work. Today, if somebody calls up and they don't want to pay the $750 consult fee, goodbye. I don't even want to waste my time. Why? Because it's very freeing to be, we're 25 people, $5 million firm. I don't need it. I don't care. Right. I've got so much, it doesn't matter. It takes time to get there. But once you get there, and if you have an established practice, you're probably there. You're going to start transitioning, and meaning we got to filter out the clients we don't want to deal with, even if they're willing to pay. Everyone knows those clients that you dread.
Well,
it's your practice.
and then you're burnt out and exhausted and, feeling just depleted. And no one wants to feel that way. We want to be excited about our work and our firms. And I think another thing too, Eric, it's like people think, well, how can you raise the fees to these clients that have been with you forever, even if it's 50 or 100? And just so you know, Eric, my approach is way more aggressive than your approach. And I've seen great success for it with all my clients. And I think it's just like we keep living for years with these fears that we're afraid our clients will leave us. And when we can eliminate that and see, hey, I want to do what Eric just said, I want to make more money with less headache. That's what we're talking about. And it requires a different way of what you've been doing and what you've been saying, even if you've never charged this much before.
No, it's I told you I have a friend of mine. I talk about this in the book, who has 2,000 clients, and every year he's complaining about tax season and then the billing, and then so what I explained to him, I said, this is easy. I don't know what your problem is. What are you talking about? I said, go back today and inform everybody they're going up $100 a month. He said, I'm going to have hundreds of them leave. I'm like, good. I'm like, the goal is to get rid of 500 of them. All right. If you don't get rid of 500 of them, you didn't go up enough.
Yeah.
But
and that's typically what I hear. That's why the A and B clients, that also, and just people, the higher the price, the more they're going to value you. So, and if you've been, inching up 5%, 3% every year, and then do a big price increase, like what we're talking about.
Yep.
They did a big price increase this year at the gas station. They've done big price increases in the grocery stores.
Mhm.
There's been big changes, and I think it's really in the way you communicate to your clients, like I shared earlier, what's been going on. Because I think a lot of people too, and firm owners have been really desperate for clients and like, oh, I can't lose anybody. Or, you'll increase your fee, but then give them a discount. I was just on the phone, Eric, with a prospect for my 8-week sales mastery training. Her discount line for last year was $30,000. I'm like, no wonder you don't have any money. No, I mean, it's just like everything she's doing in her firm is completely wrong and backwards. And I hope she can figure out how to invest and pay for my class so she can change it all. But when we constantly move our rates down to try and get or retain clients, it's a recipe for disaster. And you're never going to sell your firm and be able to get to $1 million firm doing, representation work or advisory services. It's just not going to happen because that's where your mindset is. It's the
Right.
difference between scarcity and abundance. And it's like, oh no, I can't lose my clients that I've been working with them for, all their generations of their family and whatever it is. It's like, okay, well, do you want to keep being miserable and exhausted and like totally dreading tax season? I mean, so many people every year, I dread tax season. I dread what's about to happen. And then you have to take a week or two to recuperate after it just because you've been worked to the bone, literally, and there's no meat left. And then you just feel just depleted and like, oh, I'm not going to do that again next year. And then next year rolls around and the same thing happens again.
Yeah.
And
Well,
what we're
look, I mean,
talking about is how to
and
change it.
if you're listening to this and you have that one client who, listen, don't get me wrong. I mean, we take pro bono cases. That's fine. But what you want, that should be something that you decide. All right. And if you do, I actually think you charge the full rate and you provide the discount. And the reason is I don't want them running around saying, well, Eric will do your estate plan for $750. No, I agreed to do yours because it's a horrible story, family story. I know the family and I decided to do this. But you need to know it's 5,000. The fact that I've chosen to do this at a discount, but like your friends and neighbors that come in, no, it's 5,000. Right, not 750 or 500, whatever I did, because I was a good soul. So the point being that when it comes back to your 1040 practice, do you have to get rid of it? No, unless you want to. All right. The point is to make, and Michelle has said this before, you make your practice work for you. You don't work for it. So the fact is, you need to be charging appropriately. You want to work with clients that you want to work with. It's okay. You don't have to work with everybody who happens to call your number. Just because you call my number doesn't mean I want to work with you. Just because you call my number doesn't mean I'm going to call you back. Somebody else here will call you back and explain we don't do that, or we're at capacity or whatever. So you have the right to run your practice the way you want to. You can pick and choose who you want to work with, and you need to charge appropriately. Now, the other thing that feeds into, by the way, is let's say I decide, my rep practice, and we're launching our next platinum cohort, Michelle, starting in December. It's our mastermind group. We got some great applications. They apply. We turn down some people. If you're really new at this, it's not a good fit. It's really for people trying to take their practice to the next level. So what this is really where we dissect their practice. What are they doing? What's working? What's not? And the group will provide input and suggestions. It's usually a pretty transformative experience. And I've had a few of them hit that point where I need to sell my practice. Now, I used to think, all right, so I used to think a buyer would come in and say, gee, you're too cheap. I'll pay what you're asking because I can increase it and look how much more I'm going to make. What I've learned is
they don't want to do the work though.
Well, it's not that. Here's what they know. If they have any experience at this, I'm going to come in, I'm going to increase the rates. I'm not you. I don't have any history with them.
Yeah, the
I'm now more
relationship's
expensive.
built with you.
And you know what they're going to do? Buy, and they're going to leave.
Yeah, because otherwise they can just start scratch from another firm. Basically, that's what you're saying.
Well, listen,
Can,
I've always liked Michelle, but if Michelle is going to if sell to Joe, and I don't know Joe, and he wants to double my rate,
yeah,
hell, I got a friend Andy down the road. I'll go to Andy, right? And so what by pricing yourself appropriately, you're actually more attractive because a buyer would love to come in and be like, "Hey, everyone, I look forward to working with you. We are not raising rates. Don't even worry about it." Why? Because it's priced appropriately. This is a good deal, and
it's
I don't have to
very
worry about
true.
and I don't have to worry about people bailing because the price went up because we're at a good place, you know. And so, in my experience in dealing with this through members, and Sharon Fuller has been on the program, and she does a lot of buying and selling of practices. She works with venture capital people. What I think everyone will tell you is they don't want to come in and see everything priced too cheap. The theory that we can come in and move it up, what'll happen is we'll move it up and they're going to leave. No one wants to buy that. They would much rather come in and see an appropriately priced practice in terms of what the work is being priced at, what the revenues are. Even though, yeah, they're going to pay at the higher rate, they're most likely going to keep what they're buying, right? It'll transition.
Well, and also higher fees shows that you as the firm owner are the expert and that you as the firm owner can attract a higher value clientele as well. So remember that people pay for the results that you deliver. So as long as you're delivering great results, it doesn't matter it doesn't matter about anything else. If they see the results and your client experience, it's not about how long it took you. It's not about how many forms you're filling out, but this is how you can gain time and freedom back in your personal life with gaining more revenue and getting rid of clients who are constantly either looking for the cheapest deal or just don't see your value and don't want to pay you more. Unless, it's like what Eric said, you want to do a $5,000 estate and you're doing a discount because it's for a special cause, or even do it in a, nonprofit discount, whatever it might be. But having the low prices and trying to beat out your competitors and lowballing or giving discounts, it's undervaluing your knowledge, your experience, and your expertise. So what buyer would ever want that? And that's what I think really we need to think about is the higher the value to the buyer, it's because you're not undervaluing your knowledge, expertise, and experience anymore. And you're putting a high dollar on it so you can get rid of the low ballers before the buyer comes in to make the acquisition, which also gets you a higher multiple.
Right. No, and so in talking about pricing and in talking about all of this, you just hit something the nail on the head. Part of a lot of what you need to be thinking about is the exit strategy, right? Is the sale of this asset. So the goal is to make the asset as attractive as possible, right? So you want to be getting the fees, right? The other thing is how you run the practice. And I'll give you an example. A buddy and I bought an accounting practice. Now, this goes back 20 something years ago. We bought this accounting practice. Now, the accounting practice had been, the gentleman that owned it was a motorcycle enthusiast. And the reason I mention that, he'd like to get on his motorcycle and go visit his clients. And so they were very used to, and they're all over Connecticut, all the way down in Norwalk and Greenwich and Stamford, down by New York, and then all the way up in Litchfield, way up on the Mass border by the Berkshires. And all they knew is, well, David comes to us. And so we bought that. We're not thinking about it. We buy this practice, and all of a sudden we have 300 people that expect us to come visit them. And we didn't want to go visit them.
Yeah, that's not going to work.
No. And so, so when it comes down to this, how are you managing? And if there's one silver lining to coronavirus. I don't know about all of you. My clients have now gotten very used to, we don't meet in person.
Yeah.
We get on
On the
Zoom,
phone or Zoom,
phone or
and you know, I
Zoom.
hope you're charging if you're meeting in them in person too, you know.
Yeah, I
Oh,
mean,
one other thing I wanted to share. If you do lose some clients and they email you for a PDF of their returns or they lost it, make sure you're also charging for that service.
right.
You should not be doing anything for free. If it's, you know, you have to lift a finger and do something, you need to charge for it. So yeah, I mean, if you can't be going and driving around to meet people or even having people waste your time in your office, or what about Eric, the firm owners who have clients stop by whenever they feel like it?
Right.
That's not how you gain your time and freedom back, everybody. That's just doing the old thing, you know, working really hard and sacrificing your personal space and your personal life.
Yeah, no. And it's when what's critical is the processes you have in place. So like in tax rep, more and more, we have been focusing on, with members, how we've managed to do this here. So we've automated our retainer agreements, the checklists that go out, the link that goes out for them to upload documents. If they ship us documents, that's fine. We'll scan them. They're paying the hourly rate of our staff, which are like $175 an hour. They're going to pay $100, $75 for that stuff to get scanned. Why? We're not Staples. If you want us to end up doing this, that's fine. You're going to pay for it. Okay. It's much easier if you go to Staples for $15, scan everything to a memory stick, go home and upload it all. But the point is, if you can put systems in place, right? If you think about the asset, at one end of the extreme is, again, David drives out on his motorcycle with his little laptop. He sits with his clients. He does the return and he's BSing with them. And by the way, David was retired on a second career. So to him, it struck me, it really was a social thing almost for him as much as it was a business. For those of us in business, this is a disaster. This is such an inefficient use of time and effort and money. The buyer that comes in, and had I known better, and I looks at that whole practice is a problem. It's probably a non-starter. At the very least, I would have bought it. At best, had I bought it, knowing what I know now, I would have bought it based on earnout, purely earnout, and basically those clients are all going to be in for a shock. Good chance they're all leaving. David would not have sold to me under those circumstances because he would have known full well what was going to happen.
Yeah.
So for you on the other side, thinking about, Eric, I want to do rep work. I want to do financial planning. I want to do forensic accounting, whatever it is, the advisory, high-end consulting type work. I'm going to clean up my 1040 practice. But in order to sell this whole thing to a buyer, one is you need some runway. This isn't something you do 3 months before you want to sell. It takes some time to line the practice up. One is to put the systems in place so that it's as turnkey as you can make it. Charging appropriately, right? The pricing, obviously. The processes in place to do this. So not everything's dependent on you, because when everything is dependent on you,
no one wants that.
It's very hard to transition you. You can't be duplicated. You can't be copied. And so, I mean, there's always a personality aspect, but to the extent you can have it more automated, but it's not really automated, but that you can have it more systematized, more business and less alter ego of the owner.
Yeah.
You will do much better and get a much better value when you do go to sell that practice.
Yep.
And
then you don't have to dread another tax season ever again.
Yeah, I mean, tax season should be busy, but I mean, I've told members you should go home every night at 7:00, for dinner, and they're like, It's tax season, which is another thing. You got to get over that. The old-fashioned, it's tax season, kiss your family goodbye in January, you'll see them in April. That just you know, that is a choice you're making. All right. So here's the answer. I want to make X number of dollars, and I want to wrap up every day. My last appointment is at 5. I want to walk out the door at 6. I want to be home at 6:30, 6:45, whatever it takes you to get home. So you're going to then, knowing that is your goal, you're going to engineer backwards. Okay, well, what does that allow me to do? Do I need more people? Can I automate some of this? Just by automating our intake, we cut 33 minutes off every single file. When I open 10 to 20 files a week, that is real hours. You're talking 5 to 10 hours a week.
Yeah.
Gone.
Well, and it's I call that, for your sales process, your client experience. So it's being more efficient on the front end part, right? Like with your intake, that's your front end sales process. So how do you do that more efficiently by spending an hour or two to get it set up and then saving 33 minutes times how many people? I mean, you do the math on that. You saved incredible amounts of time, which also increases the profitability, which also increases multiples when you go and sell your practice once you have these systems in place. But your front end sales process, which is part of what, Eric, you're talking about, is one of the most crucial things any firm owner should have. And that intake process, I'm sure there's even systematizing on clients uploading documents to a server. That's one of the things I do with my clients, and sharing with them to get people to mail you things and then have someone open the mail when you can create a electronic folder of some sorts and use software that's out there, or whatever you guys use, to have a portal for the clients to upload everything electronically. Now you've just even saved, I don't even know how much time. I don't have a tax firm, Eric, but I'm sure you can guess the amount of time to just make the change electronically. Also, you're going to have a different caliber clientele. So if you're scared to let some clients go, the ones that probably cost you the most in time of admin time and other will leave on their own, especially once you implement some of the technology that you're talking about.
Right. I have to tell you that this all came to me. I was talking, I had referred a case over to a friend of mine at a very large firm down in Manhattan, and they called back and said, thanks for the referral. We can't take it. It's not big enough. And I said, well, I thought it was sort of, and they actually told me, they said, how much did it cost for you to open a file? I don't know.
That's a great question that everyone should write down.
Everyone should know.
Yeah.
And so they told me it cost them almost $5,000 just to open a file. And the way that they calculated that is, right, from the moment the call came in, flowing through the steps, looking at everyone's billable time. It wasn't actually 5, it was like 4,600 something. But the point being, anything from their perspective, less than 25,000, they're not in fees, they're not touching, because it's just not worth their time. By the time they get it open, then and they haven't even started doing work yet. That's just to get it open. The client's not going to pay for that, right? I can't tell the client it's going to cost $5,000 just to set up your file. Bye, right? I'm going somewhere else. You guys are nuts. But you have to know your internal cost.
Yeah, it's and your overhead. And how can you create more efficiencies to reduce that overhead?
I think
because on an acquisition on a firm, they're going to be looking at that.
I think anyone who's doing a 1040, I don't care how busy, how complicated or easy, for anything less than 250, I don't think you're making money. When you factor
I would say 450.
But I see some like, oh, well, they're small, it's 185. What? All right, between your overhead, your rent, if you factor in the amount per minute, let's say you're working 2,000 hours. You take all your costs, you divide it by those 2,000. That is the cost per hour. just to be there. When you factor all of that into opening the files and everything else, you can't make money at those rates. And I'm not attacking them, but you know those national chains, H&R Block, Liberty Tax, Jackson Hewitt, all of those, you should not be cheaper than them. Right? They are as commoditized as you can be. If you are cheaper than them, you are way too cheap. Period. End of story. And again, it's not a knock on them. They have got big corporate structures, software. They are as systematized as you can be. All right. If you're cheaper than them,
it's kind of like McDonald's, right? Have you seen
right,
the robots flipping the burgers? Like,
right.
And now you don't even, I don't go to McDonald's, but I've seen at the airport. You don't even speak to a human when you place your order. You just put it on a computer. So I would say it's really comparable to that. And again, your client experience is different. And you can raise your fees to your current clients when no one else is doing it that way and without losing any revenue, because this is how you can create the different uniqueness factors that others don't do. And I talk a lot about this too, Eric. It's like you have a boutique firm. The more boutique and the more hands-on you are with the client experience, the more you can charge. People will pay for results and experiences.
Right. So if you're listening, saying, well, wait, Eric, I can't spend time with my client. No, you can if you're charging appropriately. The other end of the extreme is I am going to just be automated. People are going to upload their stuff. In other words, I want to turn myself into TurboTax. So what I'm going to do is I'm going to automate everything. And I can compete on price. And if you can do that, which is almost impossible, but if you could do that, yes, you can, but you will lose some of the benefits. So what I'm suggesting is you want to, so the whole cutting down the list, that is identify the clients you want to work with. All right. I have a buddy of mine who is taking this to the extreme. Every 3 years, he sells off 80 to 90% of his practice. What he does is he lists the top 20, 25 clients. Those clients alone are about 100, 150,000 for him. He sells everything else. And what will happen is just naturally, he'll start growing again. When he gets to the point where he feels he's too busy, list the top 25, 30, whatever it is that he wants to work with, sell everything else. And he's done this 4 or 5 times. So if you're sitting there going, well, yeah, you can do that once. No, no, I mean, I got to tell you something. He doesn't, his name is, you know what? I won't say his name. He's actually does a lot of speaking in Connecticut, but Ted, let's just call him. Ted does this over and over again. And he tells me, no, he's going to keep doing it. Why? He just naturally, he gets referrals, he speaks and people come to him. And he found that he started doing it again. Right now, all of a sudden, he's getting busier than he wanted to be. He's spending late nights. You know, he has kids. He's like, not doing it. When I got to that point, sold off everything I didn't want, just kept the ones I wanted. And just over time, it'll start to grow again on its own. So you really want to identify the client. I think the takeaways, identify the clients you want to work with, get rid of the ones, doesn't have to be nasty or mean, but let the other ones go. Make sure you're charging appropriately. Okay. And now with inflation, I mean, again, if nothing else, this gives you the perfect excuse. Costs are going up. All right. Our rates are going up. If you want to cut a deal for somebody, that's fine. But it really should be, as Michelle said, limited. All right. This isn't they've been with me a long time.
Yeah, this is just more like, a nonprofit gesture.
Right. You're donating your time. You're donating part of your life to those people. And if you think going up $100, they leave you, they're probably not worth donating your time to if that's the way they feel. So, in other words, your being generous isn't going to be matched back. So you want to price stuff appropriately and also do look at how you're doing things. I've had Andrew Lassis on, who's got the Tech for Accountants podcast. And Andrew's feeling is you can automate anything. Now, depending how much effort you want to put into this. But you can literally automate almost anything, right? I mean, you could take an optical reader, get their documents, scan it up, get that to link into your software, put it in. It gets a little dicey. You'd have to be testing. I mean, don't get me wrong, I'm not suggesting everyone do that. But the point being is there is existing commercial software that can automate a lot of what you want to do. Make sure you're using that to the extent you can. Get a handle on your expenses. How much is it costing you to
I
open a
think
file
that's the huge takeaway.
and
is
really
figuring it out. Yeah.
and really do that return? How much does it cost you? And when you do that, you might be shocked at how little money you're making on some of your files. Last thing, I mentioned no one should have receivables. I have to tell you something. Based on last year's return and whatever the increase is, that should get paid when they drop things off. If you do something additional, you can bill that at the end. Hopefully, that should be pretty small. You did an extra schedule, or you had to do a little bit of this or that. You know, the 50, $100, that can go out later. But no one should drop stuff off and get a draft return done, or even a return certainly filed, until that's paid. All right. So if you have receivables, you have got to fix your intake, your system. That when they drop off or they upload stuff, before that gets worked, that bill gets paid. If they're not going to pay it, guess what? It's not going to get done.
Yep.
Period. End of story. That's their choice.
I agree, and I'm in alignment 100%.
Right?
But I think before you raise your A and B clients by 50 and your C by 100, I think doing the analysis of how much it costs you to touch the file is the best exercise you could do. I had a client, Eric, I'll call him Joe for now. This client had been doing the client's businesses. He had about 10 or 12 different entities. Anyway, he was charging a flat fee every month. Never really figured out the cost of what it took his staff and everyone to, do the work for them. And what he realized is he was underpricing what he should have been charging by over 2.5 times. He went to have the conversation to get the fee to where it was. And the client said, I knew I was getting a good deal for a very long time. And unfortunately, I'm not going to pay you those fees. And he left. And it was a problem headache off his back. But he was losing money every month. He was basically, the client was paying him a few $1,000, but in reality, it was more of a $9,000 to $10,000 a month project client. And it's the same with your 1040 business. And if you really want to change how you feel and the results that you're getting, you have to go through the analysis. I don't think there's another way for you to really understand how much it on just the hard cost, your overhead, cost of goods, or whatever. Otherwise, you're just going to keep feeling burnt out and resent the clients and wonder why you even have the firm. And you're not going to be able to go home for dinner at 7 o'clock like Eric, and other people do during tax season. And Eric, a lot of my clients, they're taking vacations during tax season. They leave for a week every year during that time of year, because that's what we set up, and that's what you can create in your own firm and in your own life.
Yeah. And I know there's some people listening to this that are going to find this sort of hard to believe.
I know.
But it's true. It's true. A lot of what you're doing is because it's the way it's always been done. You've been trained to expect this or whatever. Your practice works for you. You can manage your practice. I think it's easier than you think. I think the biggest issue is you getting over the concern, getting over the fear, beginning to implement this, and finding out you can really have a practice that works for you, that you are happy with, you're being paid what you believe is fair, and the clients are paying fairly. This isn't about gouging the clients. This is about not donating your time.
Yeah. And not negotiating your fees, not giving discounts, and
maximizing the asset.
Yeah, but also taking a hold of like what I was talking about earlier, which is your, expertise. It's the value you provide. It's all of those things that have people pay premium fees. And when we undervalue our knowledge, our experience, and our expertise, the results are the exhausted, the stressed out, the frustration, the fear, the anger inside. I can't tell you, Eric, how many firm owners I talk to are angry. And I mean, I would be too if I were you. But there is a way you can change. And if you don't believe it's possible, you can, I'm sure, Eric, you have a ton of testimonials, but I have over 100 case studies of firm owners that have increased their fees 200 to 300%, even just on their 1040 practice. And it's on my client success page on the abundantaccountant.com website. And it's possible, but I just think that in reality, you're thinking, how can I do this? You know, if I charge higher fees, will it actually show that I am an expert? And will my clients really stay with me, or will they leave me? And I think that's the number one fear is, will all my clients leave me if I do this? And the answer is absolutely not.
Right.
Most will thank you for making this change and you taking ownership of what you deserve, because they know they've been getting a good deal for so long, but why are they going to say something? That's your job as the firm owner to make the change and to do something about it. And I know that your clients will support you in doing it, because I've had hundreds of firm owners prove to me that this works.
Right. And so, before we go, everyone, if you want to work with Michelle, I will put the link to the Abundant Accountant in the description to this. Michelle, thank you for coming back. It's always a pleasure.
Yeah, no, and I think everyone needs to read this chapter specifically in your book ASAP.
Yep.
This is the number one thing you have to fix right now. And if you don't, you're going to miss out on probably an extra 20 to 50 to 100 grand of revenue, and you're going to miss out on making the change now versus waiting another year and putting it off, because every time we put things off and procrastinate, it just costs you more in the long run.
Agreed. So with that, Michelle, thank you. All of you, thank you for listening. We will be talking again next week, so tune in. I will put the link for those of you who want to talk to Michelle, because she actually coaches and teaches people how to do this. I'll put that link in the description. And with that, thank you for listening, and everyone, have a great rest of your day.
Thank you for having me.